All right. Good morning, you magnificent melon heads. Happy Tuesday, everybody. I hope you are well this morning. I'm well, thank you very much. It is that time again for our morning live stream. Gotta warn you guys, not a morning person. Just not a morning person. But we will press on. My best hours are in the evening, but market's open and we must press on. Real quick, hi Mom, hi Dad. I hope you guys are doing all right. I love you guys. And I want to send a shout out to Miracle Oil. One of my viewers asked me to send them a shout out yesterday. Hello, Miracle Oil. Thank you for watching my channel. We're going to jump right into it today, guys. We're going to shrink my big fat melon of a head. I got a lot of windows open. There's a lot going on in the world right now. Real quick, let's just take a look. It looks like markets are set to open lower this morning. S&P looking to open down about 13 points. The Dow down about 90, possibly 100. And the NASDAQ down about 0.3% or about 50 points. Oil is higher. Gold is higher. Silver is higher, right where I like it. And the 10-year Treasury is pushing back up again, very quietly, rising again now at 2.45%. And real quick, looking across the board here at commodities, I see a lot of green in the commodity space today. Gold up $2.80, not all that much. Silver is up 1.3% or 33 cents. Copper is up this morning. Oil pushing back over $103 a barrel now. Natural gas $5.97. Are we going to see $6 U.S. gas soon? Interesting. We'll have to keep an eye on that one. And it looks like the metals are mostly higher. And, of course, in the commodity space, the agricultural commodity space, up almost across the board. Corn is up 1.4% higher at $10. Soybeans up 1%. And where's wheat? Where is wheat? Wheat up 4.3% this morning. Something going on in wheat markets. So commodities are heading significantly higher. The big story today, I just want to touch on it here, is what's going on in Peru. And if you've been following this channel, I've been talking about this for a while, that when it gets too expensive to eat, that simply put, people get pissed off. All right? It's food demand is inelastic. It doesn't move. It doesn't go up or down. People need to eat during good times. People need to eat during bad times. So when food prices rise, it's not like oil. It's not like natural gas. You don't get demand destruction when prices rise out of control. It doesn't work that way. All right. When oil gets too expensive, people drive less. People use less gasoline. They use less energy. They tighten their belts. They make sacrifices. It does not work that way in food. And so you get these pre-existing socioeconomic tensions, whatever they be they racial, be they economic, whatever's going on, tribal, whatever issues have been bubbling beneath the surface for years, they come out in a bad way when food prices rise. And we saw that in 2011 with the Arab Spring that started in Tunisia and just ripped across northern Africa into the Middle East. And there's still a horrible civil war going on in Syria, even to this day, that sprung out of the Arab Spring. That was over 10 years ago. And here we are today. I've been saying on this channel that if there's one thing that will define 2022 and 2023, it's going to be civil unrest. It's going to be rioting. It's going to be social disorder. And it's starting here in Peru this morning. They have deployed their army to try to control these violent protests. I guess it started with bus drivers and then truckers. Now farmers are joining in, and it just an unfortunate situation all around. I don't have all the details about what's going on in Peru and what the political things are. I know there is a very, very leftist government in Peru that has made all kinds of promises that it has utterly failed to deliver on. And now, like everywhere else in the world, food prices are out of control and people are angry, and justifiably so. Right? A few years ago, we all lived in relative abundance. I mean, there was obviously pockets of poverty around the world, but for the most part, things were going pretty well a few years ago. And I don't know what happened. What happened in the span of a couple of years? I can tell you, the uber wealthy got uber wealthier far uber wealthier. A lot of small businesses got wiped out. Everybody got locked in their houses and told, sit down and shut up, and had their assets frozen and everything else if they dared to speak out. And now this. So unfortunately, I think this is a sign of things to come. I don't think Peru is going to be an isolated incident. I think we're going to see this more and more across the world as food prices continue to rise, and food prices will rise, folks. All right, I've been talking about this since October. I've been getting louder and louder about it more recently, especially since the violence broke out in Eastern Europe. But there is a food shortage coming. It is no longer a theory. It's no longer a hypothesis or a thesis of some financial guy on YouTube. All right, it is now a fact. The food shortage is coming. All right, fertilizer production is down. Fertilizer use is down. All right, there is only one result of that, and that is less food grown. That's coming. And what we're seeing right now, with all the food prices rising and everything, this is just the inflation story that we've all been living with, all right? And then this is some ramifications of what's going on in Eastern Europe. The fertilizer story has still not hit food markets, all right? The real big story here with food markets, this fertilizer story, it is still not reflected in the price of food. I just want to emphasize that. That is a 1 to 2 year delay, all right? Fertilizer has to hit the soil and then result in the crops grown and then be harvested, and then you get the low harvest. So in my opinion, I don't think the fertilizer story is really going to wake people up until late summer this year. Late summer, when the farmers start making their reports about what their crop looks like and what the harvest is going to come in at in the fall in the northern hemisphere where most of the world's food is grown. That's when people are going to say, oh my God, it's so much worse than we thought. And we're just now starting to get a little bit of coverage of that in the mainstream. But even that is, considering how big this story is going to end up being, the coverage in the mainstream press just does not do it justice. If only Will Smith had slapped Chris Rock across the face and then turned around and faced the camera and said, oh, by the way, millions of people are going to starve to death. Maybe then this story would have gotten the coverage it deserves. But Will Smith didn't do that. And so I guess this story is going to go largely underreported. Anyways, that's your morning doom and gloom from Nobody Special. But folks, take advantage of this time. All right, that's the only thing. I've been talking about it a lot. I did the video about getting a supply of food. It's coming. All right, be prepared. If you've been watching this channel, you have the benefit of foresight. You have the benefit of seeing it coming. All right, so there's no excuse to not prepare. Get yourself a little bit of non-perishable food, all right? Don't buy stuff that you're never going to eat. Don't buy stuff that has a short shelf life that you're going to end up throwing out. Pay attention to shelf life. Pay attention to storage space. Don't go into high-interest credit card debt to do it. But at the same time, we see this coming, folks. And honestly, the best performing asset class of 2022 may very well end up being non-perishable food, all right? The price of non-perishable food may double, may triple, may quadruple in the coming months, all right? Gold and silver might not do that. Stocks certainly won't do that. Bonds aren't going to do that. So, like last year, the best performing asset, the best investment you could have made in 2021 was a used car. Well, in this cockamamie, messed up world, I think non-perishable food is probably the single best performing asset you can buy this year. And if you buy it now and the price quadruples, well, you have made a return on your investment because you're not going to have to pay that nominal quadrupled price months from now when you eat it. So take advantage of this time, folks. Take advantage of it. Real quick, I also want to touch on something I saw today, and I don't think this is unrelated. All right? And let me pause. Bloomberg loves their ads. We'll just let it play. It's being quiet. JP Morgan is reviewing their commodity exposure after the nickel chaos. And I don't think this story is limited to nickel, to be honest with you.
Business with some of it.
Shut up, Bloomberg. Okay. Checks are focused on base metals and LME-related businesses. Any pullback by JP Morgan could hit commodity market liquidity. All right, Jack, what does all that mean? So JP Morgan was really the big story behind that mess in nickel markets where, remember, that Chinese big shot took out that massive short position in nickel, and then he couldn't cover his shorts. And that left JP Morgan holding the bag because when the adage, when you owe the bank $1,000,000, you have a problem. When you owe the bank $1,000,000,000, the bank has a problem. So of course, JP Morgan's not allowed to lose money, right? So we just shut the whole market down, turn everything off, and then change the rules while nobody's trading to benefit JP Morgan. Well, now JP Morgan has all their risk officers who apparently have been asleep at the wheel doing nothing. God knows what they've been doing for the last few years. But they are now out combing through the trading positions, looking for problems in the commodities market to minimize their exposure. And there's a couple of things I want to point out in here. They're reviewing their business with some commodity clients after last month's nickel short squeeze, a move that threatens to drain more liquidity out of the sector. All right, and when you hear drain liquidity out of the sector, you need to think two things. You need to think volatility. You need to think higher prices. So this is telling me that JP Morgan sees violent swings in commodity prices coming and significantly higher commodity prices. Senior management at JP Morgan has asked teams around the world to conduct fresh due diligence, because their old due diligence is stale and rotten, if they did any at all, on some existing clients. Now, here's the important thing, including metals traders and oil refiners. All right, so metal traders and oil refiners, these are people who tend to be short those commodities, especially refiners, right? Refiners and producers, they tend to be short the commodities that they produce because they hedge their positions against future price swings. That guy in China, the big shot, he was a nickel producer, right? He owned massive amounts of, was it nickel smelters or mines? I forget what. But he was in the nickel business, and he had just grotesquely shorted the metal that he produces. And then he couldn't cover the shorts when production went down because the war broke out. There was also a mention in here of agriculture. I guess there wasn't. I was thinking of a different article. Anyways, so the gist of the story here, folks, is that JP Morgan is afraid of significantly higher commodity prices in the short to medium term. All right, so they've got their risk people are out here digging into all these trading positions, in particular the big traders, right? Oil refiners and metal traders, that's the big dogs. They want to see who is massively short, and they want to make sure they're going to be able to get paid. So we could be looking at margin calls in the commodity space. If not margin calls, we could be looking at a slow unwinding of short positions. Either way, JP Morgan sees prices going much, much higher. Okay. Now, also on the subject of the food shortage, I saw this article in Zero Hedge, and I didn't link to it in the description. I should have, but it's out there. 20 facts about the emerging global food shortage that should chill you to the core. Strong language from Tyler Durden over at Zero Hedge. I'm just going to breeze through this article and give you a couple of them. One of France's most important government officials telling us we should brace ourselves for an extremely serious global food crisis. We all heard Joe Biden's message that food shortages was going to be real. It's reported yesterday that German supermarkets are going to increase their prices from 20 to 50% for some food items. Rationing has begun in Spain. Rationing has begun in Greece. The head of BlackRock warning that there'll be a first time this generation is going to go into the store and not be able to get what they want, whatever that means. Since this time last year, some fertilizer prices have gone up by as much as 300%. Many farmers in Africa will not be able to afford fertilizer this year, which is going to reduce agricultural production by an amount capable of feeding 100 million people. Yes, that was 100 million people. That is the reduced amount of agriculture that is going to be produced in Africa, and that is a continent that is already food insecure. Russia, one of the biggest global exporters of fertilizer. In a typical year, Russia and Ukraine collectively account for approximately 30% of global wheat exports. Half of Africa's wheat imports usually come from either Russia or Ukraine. So remember that. We've got already in Africa reduced output by enough to feed 100 million people. On top of that, they get half of their food imports, half of their wheat imports from Russia and Ukraine. And I've been saying on this channel for a long time, most of the casualties from this war in Eastern Europe will not be on the battlefield in Eastern Europe. They will be in Africa. They will be people starving to death. And on that subject, we can add the Middle East and Southeast Asia, because I think you're going to see widespread famine in those parts of the world also. One Russian official is warning that the nation may soon only export food to friendly nations. On Friday, it was announced that another 5 million egg-laying chickens in Iowa would have to be put down because of the bird flu. We're now at somewhere around 25 million chickens have been culled in the United States because of this bird flu that not many people are talking about. But shout out to Chris Taylor at Financial Fitness. Man, Chris Taylor was on this story about the bird flu back when it was just in Israel, like when it first popped up in Israel months ago, months in advance. I mean, he was on top of this story way out in front. So, Chris, nice job on that one. I should have paid attention back then. If I had bought my chickens back then in my chicken coop, they'd be laying eggs by now. But I waited. Okay, where are we? We read that. We're being warned that the winter wheat harvest in the United States will be disastrous due to severe drought. And I got to send a shout out to Mish, my moderator, who has been sounding the alarm on the winter wheat harvest these last couple of days. Very good, Mish. Thank you, sir, for everything you do for the channel. China's agricultural minister announced that their winter wheat harvest could be the worst in history. During a recent interview, one U.S. farmer stated that most Americans won't like it when your grocery bill is up $1,000 a month. A bit hyperbolic, but this next one, the head of the UN World Food Program, says that what the planet is now facing is unlike anything we have seen since World War II. And folks, in World War II, tens of millions of people starved to death during World War II. So these are just some of the stories going on in this food shortage fiasco that is developing. And again, our leaders are just ignoring it. And here is the story about the birds. Iowa farms lose 5 million birds to bird flu. And just want to give you some of the numbers here. The new cases mean that across the nation, farmers have had to kill about 22 million egg-laying chickens. All right, an egg-laying chicken, since I'm doing the chicken coop thing right now, an egg-laying chicken lays anywhere from 5 to 7 eggs a week. So what we're looking at here is more than 100 million eggs a week less will be produced in the United States because of these 22 million egg-laying chickens that have been killed. I mean, that's basically every family in the country will get one less egg a week because the production is down. That is enough to significantly impact the price of a dozen eggs, significantly. And this was part of the calculus on why I went and finally put the money into building a chicken coop and buying birds and everything else. I see the price of eggs is going to be ridiculously high. We could see $10 eggs this year, folks. We could see $10 for a dozen eggs this year. On top of that, we've got 1.8 million broiler chickens, 1.9 million pullets and other commercial chickens, and 1.9 million turkeys have all been culled. They're culling their herds. They're killing these chickens to try to slow the spread of the disease. And we've all seen recently how efforts to control the spread of disease don't always work out the way they were hoping for. Anyways, I just, again, folks, I just want to tell you, pay attention to this story, all right? Pay attention. Take steps now while it's still affordable, while you can still do it. Don't wait until food is too expensive because by then it will be too late. All right, real quick, we are now, the market has opened. It is 9:33. We're at S&P down 10.75. Let's refresh the window, make sure we have up-to-date information, and we do. The Dow is down 7 points. Looks like it wants to head higher, though. Fighting for positive territory. The NASDAQ is red about 54 points. Crude oil at 104, up 82 cents. That's WTI crude. And gold is at 1940. And silver is at $24.94. Looks like silver may make a run at that all-important $25 mark today, so we'll be keeping an eye on that story. And the 10-year U.S. Treasury is now at 2.46. Speaking of the 10-year U.S. Treasury, the M-cubed, or the Modified Mannarino Market Risk Indicator, is creeping back up. We're now at 189. All right, we're still in the high risk area. We have not broken into extreme risk, but we've been threatening that area for a while as the 10-year yield has been rising and the dollar has been strengthening. And I also just want to mention the original Mannarino indicator, the MMRI, is at 151, mid-band in the moderate risk area. So we're going to keep an eye on that. And here it is, here, folks, the chart. It's been a while since we looked at the chart. But here we go. This is the descending pain tolerance threshold for the American economy. Every time we get above this line, something in the economy tends to break. Every major market event for the last 40 years has occurred somewhere near this line. And if we zoom in, you can see we are now above that line, pushing towards, interestingly enough, the 200-month moving average for the U.S. 10-year Treasury yield is 2.66. And the reason I mention that is because that line acted as our ceiling back in 2008 with the Powell pivot. So I know I was talking for months about how 2.2% was the level something was going to go wrong, and we obviously blew right past that 2.2% number and are now significantly higher. But remember, this is not a landmine that you step on and it goes boom. This just means that the conditions are present for bad things to happen in the market. So we're going to keep an eye on this. And again, 2.66. Interesting. We'll see what happens around that 200-month moving average, because we have not been above that since 1987. Since 1987. Long time ago, back in the Don Mattingly days of Yankee baseball. Go Yanks. Yeah, I know. I live in Pennsylvania and I'm a Yankee fan. I can't say that out loud. It's not safe. All right, a couple of the other trades that I've been watching, I just want to point to. Let's look at the silver chart, and I saw some nice things in the silver chart today. I deleted that upward channel that I had drawn in some previous weeks. We're still above the 50-day moving average, though, which is very encouraging for me. And I just want to zoom in here. This purple line right here is the 50-day moving average. The red line is your 200-day moving average. Circled in red here was that wonderful golden cross that we got a few weeks ago. And I just want to point out here that we have now twice bounced off of this 50-day moving average. It looks like it's acting as support. Again, very bullish indicator, a very good sign. So we're going to keep an eye on that. I would like to see silver move back into this upward channel that I just deleted this morning. But all intentions are it's going higher. And I just want to mention something that Peru, we talked about the food rioting in Peru. Peru is the second largest producer of copper and silver in the world. There are a lot of copper and silver mines in Peru. And if this civil unrest continues for long periods of time, or if it descends into utter chaos, it could potentially result in mining disruption, which could affect silver supply, could affect copper supply. So keep an eye on your metal prices. Keep an eye on that story in Peru. This could have effects here. And I see Mr. Mike Binder. Thank you, sir, from Robin RC Models for the super chat. I appreciate the support of the channel, brother. He says, "Good morning, Jack. Buy coffee beans. They'll be expensive, and gold is up." Mike, I don't want to live in a world without coffee. So I'm going to pretend you didn't say that, as if to suggest that there might be a coffee shortage, because man, you think people are angry now? You take away my wake-up juice, I might go riot. Or at very least, just be very, very cranky and overall unpleasant to be around. Not my usual sunshiny self. Coffee beans, interesting, as an inflation hedge. Coffee is one of the largest, what is it, by weight or by dollar value, traded commodities in the world. Coffee is up there, believe it or not. A lot of pounds, a lot of tonnage of coffee moves around the world. And rightly so, this house runs on coffee. But thanks again, Mike, for the support of the channel. I appreciate that. And gold is up. All right, let's look at the gold chart, Mike. Since you asked, we looked at the silver chart. Let's see what we've got in gold. Gold is up. All right, we're up $7 an ounce right now. Still below this ascending level of support, which I guess I should retire that line now because we've been below it for a while. So I'm going to delete that line here. We got that nice bounce off the 50-day moving average a few days ago. I talked about that during my stream either last week or 2 weeks ago. And we seem to be heading higher here, trending overall higher. Again, the inflation story is good overall for gold. Keep your eye on gold next week, folks. April 12th is the next CPI read. And keep in mind that the big move that we got in food and energy prices after the Russian invasion of the Ukraine and that commodity, that massive spike. I mean, we see it here in the gold chart too, right? In the beginning of March. Those numbers have not yet been reflected in any of the CPI reports. So the March CPI read that we get on April 12th is going to be big. It's going to be really, really big. All right. And I don't know if markets are prepared for how big it could be, but that could be a shock to the system. That could wreak havoc in stock markets. That could wreak havoc in bond markets. Certainly precious metals. Be ready for that. That's all. And interestingly enough, right after we get the CPI report next week, bank earnings are going to start. And I know a lot of other channels are out there saying bank earnings are going to come in really, really good. I may do a video about this week. I may not. I'm not sure. I'm still marinating on the idea. But I'm not convinced bank earnings are really going to be good. There's a lot of things. There's a lot of things could make bank earnings very bad. And when I see JP Morgan telling their risk people to go out and clean up the mess in the commodity space, I don't know. Remember, banks borrow short term and lend long term. And right now, long term is higher. The interest rates are short term is higher right now. So, which means bank margins are being squeezed. So if we get the worst CPI report in decades, which it will be the worst CPI report in decades, and then we get disappointing bank earnings, you're going to hear everybody screaming stagflation. All right, you'll be so sick of hearing stagflation on Twitter and in financial press. That's going to drive markets lower if that happens. All right, I could be wrong. All right, there's a lot of people who are a lot smarter than me who are out there saying that bank earnings are going to be awesome because of rising interest rates, and that very well may play out. That's just not what I see when I look at the numbers right now. Again, not financial advice, not a financial advisor, but there's a lot needs to go right to have good bank earnings. And I see Miracle Oil. Thank you very much for the super chat. I hope you got my shout out at the beginning of the stream. He says, Jack, are you looking to buy some food ETFs other than corn? Any other good ones? Please go over the LNG chart. Do you think crude can beat the high this year? Okay, there's a lot built into that comment. Let's see. There's a couple here. I am also in the wheat ETF, ticker WEAT. That one has not performed as well as the corn ETF. Real quick here, I just want to mention the corn ETF has now broken out above this previous high from early March. So the corn ETF is going higher. All right, we've got a new high in that one. And I have increased my position late last week. I increased my position in the corn ETF. So again, I think this story is just getting started. And I did that video a few days ago about the report, the prospective plantings report from the U.S. Department of Agriculture, that said there was going to be 4 million fewer acres of corn planted in the United States. So the corn story, alive and well, that one is going to run. All right. Now, I am also in the wheat ETF. Again, all that CYMA stuff, not financial advice, not a financial advisor. I have also bought this ETF, ticker WEAT. Same deal. It invests in wheat futures. I'm less enthused about this one. Because this one I don't think will be impacted as much by the fertilizer story. And I also think a lot of the global bad news is already baked into this one with the outbreak of war and that huge spike that we got at the beginning of March, right? We're nowhere near that spike right now. The reason I bought the wheat ETF is in the event that hostilities in Ukraine last longer than a couple of weeks and Ukraine misses their spring planting season, or if, too many Russian farmers are conscripted and sent off to war, or for whatever reason they miss their spring planting season, or doesn't go smoothly, we could see later on in the year a reduction in the wheat harvest back in the fall, or coming in the fall. So I'm also in this one. Again, I'm less enthused about this than I am the corn trade. I think a lot of the news is already baked into the wheat story. But I did take a position in this one. It is a small position. Corn is my main story. Those are the two that I'm in. The LNG chart, as it happens, Miracle Oil, I have the LNG chart over. This is Cheniere Energy, folks. If you're new to the channel and you haven't been following this one, Cheniere Energy buys natural gas in the United States. They super cool it. They load it onto ships, sell it across the pond, and they sell it into the far more lucrative European markets. So this is a play on the arbitrage between the high natural gas price in Europe and the low natural gas price in the States. And this company has just been on a tear. I mean, zooming out on this chart, going back a little over a year, you can see they have really done well. And right now, they're inside this channel. They're about mid-band in the channel right now, trading in the mid-140s. If I see Cheniere make a move significantly higher than, say, 150, if I see a 151 or a 152 in Cheniere, I'll probably put in a sell order for about a quarter of my position, and then I'll wait until it comes back down and retests around this 140 level, and then I'll buy it back. I've been trading around my core position in Cheniere Energy, but those are just small chunks that I move in and out of. I leave the bulk of my position in play because I think long-term this one is going way higher. I think there has been a paradigm shift in global energy markets away from Russian gas towards a bigger LNG market. And I think those prices, the LNG prices, are going to be higher for years to come, even if we see hostilities somewhat reduced between Ukraine and Russia, or we get some kind of new Cold War. I think the fallout from the economic war is going to continue, and it's going to drive a lot of that natural gas market into LNG, which is really, there's only 3 countries in the world that provide any significant amount of LNG. It's Australia, Qatar, and the United States, and Cheniere Energy is the biggest producer here in the United States. So this one, I think, is a long-term play. I may even hold this one through any kind of market turmoil. I'm not sure if I saw markets start to crash, would I dump this one or not? It would probably be dragged down by the markets, but it might come right back up. So I'm not sure how I would play a major market correction on this one, but for now, I think we're going higher in Cheniere Energy. And Miracle Oil, thank you again for the super chat. I really appreciate the channel. Really appreciate the support of the channel. And oil. You also mentioned oil. Could oil beat the highs of this year? Absolutely, abso-freaking-lutely. Oil could break those highs that we saw this year. What was the high? $135 a barrel. I would be surprised if it did not. Let's put it that way. I'd be really surprised if oil didn't go above $135 a barrel. All right. Keep in mind, if the Iranians catch a cold, this thing's going above $135 a barrel. We've still got relative stability in the Strait of Hormuz right now. If things deteriorate there, oh boy, we'd be longing for the days of 135 oil if that happened. So keep an eye on that story. And again, thank you very much, Miracle Oil, for your support of the channel. I appreciate that very much. Another story mentioned here on the talking about agriculture and the corn story. This one just came out yesterday. China has made its largest corn buy since May, and it may just be the start. Now, this is May of 2021, their largest corn buy. And China has not been keeping up their end of the bargain under this phase 1 of the, remember the trade deal? It was one of Trump's big trade deals after the tariff war of Trump's term in office. And then, we created this deal. We were going to rescind some of our tariffs, and China was going to buy more U.S. agricultural products. Well, China did not buy more U.S. agricultural products. Well, that has changed, and I think what happened here is because the Ukrainian corn is no longer making it to market, the Chinese have had to go somewhere else for it. Now, the real reason the Chinese need this corn is because pork is a staple of protein in the Chinese diet, and they need animal feed, and they typically buy it from the Ukraine. Well, Ukraine corn cannot get out of the Black Sea right now because the Russians will sink it. So the Chinese have had to go somewhere else, and there's only a few places in the world you can go for that much corn: South America and the United States. All right, Brazil, Argentina, the U.S. Argentina is not exporting as much because they have implemented price controls to try to contain inflation within their own borders. Why? Look at what's happening in Peru. You know why they've done that. The Brazil harvest came in below expectation because of droughts over the winter, over our winter, their summer. So the Chinese are buying more corn from the U.S. now. And this is this disruption that's happening in Eastern Europe spilling over into markets. This is going to drive American corn higher. And this may be why corn has made this new high today, because of this big Chinese purchase. What was it, 1,000 or 1,000,000 tons they bought? They bought 1.08 million tons of U.S. corn in a single purchase, and there are a lot of people are saying that this is the start of a new trend as that Ukrainian market share now shifts to the global export markets. So again, the corn story only just getting started. I think the wheat story, again, has maybe not largely played out, but more of the bad news is baked into the wheat price than it is the corn price yet. Corn is just getting started. And above my pay grade, hello, sir. As it happens above my pay grade, I have a window open. I have a window open right now. You may have seen it, but let me read your comment first. Thank you for the support of the channel. If the dollar hyperinflates, how would a CBDC solve that problem? If people don't trust the dollar, they won't trust a CBDC unless it's backed by gold. I do think eventually we're going back to a gold-backed dollar. I think we'll be forced there. That is an excellent question above my pay grade. I don't think people will necessarily trust a CBDC. I think they'll be lured in. They won't trust it, but I think what the Fed or the government is going to do when they roll out a CBDC is they're going to sprinkle a little bit of stimmies on top of it, right? They're going to say, "Oh, everybody sign up for your new CBDC wallet. That's attached to your identity, your digital ID, whatever it is. They'll start with a digital ID, and then they'll go to a CBDC wallet. Then they'll give you your stimmy to your CBDC. Or maybe they'll do something like, we'll give you a little 10% bonus on your tax return if you take it directly to your CBDC, to your Fed wallet. They'll figure out some way to lure you in by giving you just a taste, right? Just like a drug dealer gives you a free sample first because he knows he's going to get you hooked and you're going to come back for more. I don't think people will trust it. I think they'll just do it because they're desperate, right? When you're desperate to feed yourself, look at corn prices and look at food prices, right? And then the Fed comes in and says, we'll give you a little bit of stimmies here. You'll take it. If you're hungry, you'll take it. So I wouldn't mistake desperation for trust. I don't think people will trust it. I can't imagine anybody trusts these people at this point, but then again, I have very little faith in humanity. So, but thank you very much for the support of the channel above my pay grade. And speaking of above my pay grade, just so you can see that's here, I'm going to lower me down. You see right up here? As it happens, I have a window open with your channel on it. Above my pay grade is another one of these members of the Ninja Nation who has just started his own channel in recent weeks. I met above my pay grade. He was at the event, not in Denver, the Dallas event, the Speak Freely event. And he's just started his channel. I'd love to see new financial channels starting. I've actually put a link in the description of this video already. If you guys want to check this out when this stream is over, go over to Above My Pay Grade's channel. He's a finance channel with a focus on individual freedom and personal liberties, which if you've been following this channel, you know that is very important to me here. Also, free markets, individual liberty is the best system. I don't think there's any substitute for it. And as the world lurches more and more towards authoritarian governments, I see more and more problems emerging, i.e. hyperinflation, food shortages, all right? The fact that these things are happening when individual liberties are being threatened is not a coincidence. It's not a coincidence, all right? I think it's a feature of the authoritarian system, not a bug, as they say. So the more people we have talking about finance and about individual liberty, the better. So head over to Above My Pay Grade, subscribe to his channel, check out his videos, tell him nobody sent you. And Above My Pay Grade, thank you again, sir, for the super chat and for the support of the channel. I appreciate that, brother. And awesome job. Good luck with your channel. I think we will be hearing more from Above My Pay Grade in the future. All right, it is 9:53. I've been going for a while here. Let's visit markets one last time. S&P 500 is still in negative territory, though barely, down 3 points. The Dow is now up 79, almost 80 for the day. NASDAQ heading lower, probably off of that bad news at Amazon, by the way. There are bad things coming from Amazon. They lost billions of dollars on their Rivian stake, and also their warehouse workers are unionizing. So if Amazon stock heads lower, it's going to drive everybody down with it. That story's coming out in coming weeks also. We'll have to do a whole video on Amazon, I guess. But I digress. Oil still at 104. Gold is now up $12, almost 13 at 1946. Silver above 25. All right, silver is running up 2%. Maybe Elon Musk saw Economic Ninja's video from yesterday about buying silver. Economic Ninja did a video last night saying, Elon Musk, you bought Twitter. How about silver? You could corner the silver market, and you could do it for cash. Check out Economic Ninja's video about silver, by the way. Share that one, hashtag Elon Musk. Let's make Elon see it, because Elon Musk could single-handedly break the stranglehold of the bullion banks, which the Russians may have already broken for us. I did a video on that last week also. And the 10-year bond is now at 2.46. Looks like it may want to head lower. We will keep an eye on that story for the day. All right, folks, I've been going for about 45 minutes. I think we're going to wrap it up there. Again, do not wait. Get ready for the food shortage. It is coming. It is no longer just some guy on YouTube's theory. It is here. It's going to get worse. The rioting has started in South America. I think we will see more and more of that. I want to send a thank you to my Patreon supporters. Thank you guys for everything you do to the channel. Link in the description down below that. Don't forget to check out Above My Pay Grade and his awesome new channel. And until next time, live small and dream big.